if the economy is strong and they gave a 0.5 point cut yesterday, what is the outlook? And again, I'm asking you to open up your crystal ball. You've got over 4 decades in this industry, so I think you've got some good track record of, what does the next rate cut look like? Is it something going to happen before the end of the year?
Well, that was part of what came out of the end of the meetings and his press conference. The market at this point pretty much has decided. I'm going to say decided because nobody knows, but the expectation now is that we're going to have likely 2 more rate cuts by year end. And again, I always hate to say rate cuts or a cut in rates. What we're talking about is the Fed funds rate. There's an expectation that the Fed is going to lower that 2 more times this year. Well, the next one isn't until November, the day after the election. And that's expected to be 0.25%. And then another 0.25% in the last meeting of the year in December. So you can then expect another 0.5% decrease in the Fed funds rate if that bears out and turns out to be true. Now, again, I would caution everybody, even if that does turn out to be true, you don't want to fall into the trap of thinking, well, that means mortgages are going to go down by a similar amount. You should not think that way, because that's not how it works, at least in terms of long-term fixed rate mortgages, 15, 20, 30-year loans. Different story if we're talking a HELOC, home equity line of credit. Since most of those are tied to the prime rate is directly correlated to the Fed funds rate. So, another 0.5% at year end will help those HELOC borrowers, because the rates on that particular loan type will or should drop. In fact, this week was good news for any homeowner who's got a HELOC. You should therefore see on your next monthly payment statement, you should see that interest rate on your HELOC statement should reflect a 0.5% lower,